like income, uh, like she has a second job that they wouldn't count because she'd only been there like a year and 3/4 and not 2 full years. And a few different things that they were telling me is in just the last couple of months they've tightened up on since COVID.
Well, with the second job, it depends on what type of job it is. If it's an hourly position, then definitely need 2 full years. And then also with the because anytime there's variable hourly income, we would need a full 2 years to average. And then with second homes, Fannie Mae, Freddie Mac did tighten those up. So what they've done is they've limited, not necessarily limited, but they've increased pricing on second home. So if a bank holds, more than a certain percentage of their total portfolio in second homes, there's going to be a pricing adjustment to that. So
Okay.
that's definitely over the last couple of months. So depends on the bank. Some banks aren't hitting people with that adjustment. Some are.
Yeah, the thing that he was telling me about was more of a Fannie Mae guideline. Yeah.
Mm-hmm.
Well, if you change careers and you go into a new career altogether, you need a 2-year work history too, right, Terrence?
Well, that depends on how you're paid. So if you are, a salaried employee, then no. If you're going from, the banking industry to food service, even if you are still a salaried employee for both, that's fine. You need to wait 2 years. But if you're moving from a salaried position to a commission-based position or an hourly based, then we would definitely need some seasoning on it. Because anytime there's commission-based income, bonus income, we need a 2-year history of that. Mm-hmm. Overtime, same thing. You need a 2-year history. So, someone is in the loan process and they have a salaried position, but they want to move and change careers. Tell them to wait.
Yeah, and the 2-year rule I know that's nothing new. I think whatever they were referring to was more of maybe it's changes regarding second job or the tightening of the ratios for a second home. But speaking of that, Terrence, what other changes have you seen, if any, since COVID, either because of COVID or since COVID? What other just kind of lending guidelines have you seen changing?
Well, you're talking about a little over a year's worth of guideline changes. Things have actually started to loosen back up, thankfully. It was very tough for people that, essentially anybody that was not a salaried employee, when they really clamped down on those guidelines because of such uncertainty. So, people with, again, variable income, people that were in sales position, commission-based positions, having that big hit that they took last year has really messed up their income because, again, we look at an average of the last 2 years. So, it doesn't matter if they did well in 19 and they're doing well again in 21. 2020 has definitely hurt them. Self-employed borrowers, business owners were, needing more documentation to source and show that they can have sustainable income over the next couple of years to see that they're back to normal, looking at bank statements, looking at verifications of business through tax returns, through accountants. So things have clamped down, and tightened up, but thankfully some of those things are loosening, which makes everybody happy.
Yeah, we talked about that a little bit last week about how when we locked down, the banks were really expecting, because of all the job layoffs and whatnot, and they were expecting it to really kind of crash, and they really tightened up. And then it turned out that that in fact those things didn't happen, and the banks, fortunately, because of what happened in '08, kind of learned their lesson and had their reserves built up and were ready, and we're being very conservative, which of course is what banks do. But anyway, shall we get into our charts and graphs? Are we ready for charts and graphs?
Oh, we love charts and graphs.
I love charts and graphs. Okay. I think you're going to find some surprises this month. First of all, wrong one. Wait a minute. Get to the right one here. I got to get this stuff out of the way. Okay, here we go. All right, this is, let's start back at the beginning. You guys are seeing the weekly update, I hope.
Mm-hmm.
Sorry. Let me make.
I was waiting for you to go, hello.
Yeah, I know, right? I forgot to turn my volume off. Sorry. Okay, all right. Are you guys seeing the weekly? What?
I'm so used to you answering anyway. I was waiting for you to go, hello.
Yeah, I know. Well, yeah, I don't know why I answered that last one time I answered, but anyway. Are you guys seeing the weekly markets? Are you seeing the street?
Yes, we see it.
All right, good. All right.
Yeah.
Good. All right. So I find that some of these are kind of interesting this week, or, since we were on last month. First of all, I mean, closed sales are still ahead of 2019. Again, the green is 2019, and the blue is this year. Or, I mean, not 2019, 2020. And the blue is current. But there has been an interesting decline in number of closings, which, kind of curious, right?
Well, not with the lack of inventory, I'm not surprised.
Well, that's what I'm wondering, if that's what the issue is. But now here's another interesting. This is listings that have actually gone under contract, and of course we are so way ahead of where we were in 2020, partly because of lockdown. This was the period of time that we were locked down last year. I'm sure that had a big impact. But I'm also finding it interesting that we had a peak here right the middle of April, and it seems to be kind of steadily declining. 52, let's call it 5,300 down to 5,348. That there is about the same, down to 46. So what do you make of that, Wes? What are your thoughts about that? Anything?
No, other than, like I said, there's lack of inventory. So even though you hear about people being busy, they're running around with buyers and writing many offers before they actually get something.
Mm-hmm.
So I think that's part of it. And I also think that it can't, even if it's up, it still can't maintain that same pace, week after week after week.
Yeah.
But,
yeah.
and it's a little earlier than usual. I would say going into summer, we normally slow down some anyway, but.
Yeah, it does. I mean, Memorial Day kind of marks the official end of our spring market, I would say.
Right. So it looks like it's happening a little bit sooner, a couple of weeks sooner, but.
I mean, in 2020, you can see back in January and February, we were starting out with we started early, I think, in 2020 with our spring market.
Mm-hmm.
Of course, this is when we started this year. And it started to really take off, and this is when we locked down in 2020. So I think that the year-over-year change can be attributed to lockdown, and I think now sellers are kind of getting the memo about inventory being low, huh? Here, the middle.
They're jacking those prices up.
Yeah, well, so 7,600 new listings, 7,800 new listings, 7,800 new listings coming on the market. So inventory is starting to climb. These are the rented listings. We don't care about that. We don't care about this one either. Open houses are up. I think that just speaks to, this is kind of like our new marketing strategy, right, Wes? I mean, It's like you put it in the MLS on Thursday afternoon, Friday morning, you hold your open house on Saturday, Sunday night, Monday morning, you look at your
Well,
multiple
that's,
offers,
yeah, I think that's a lot of people's
right?
market strategy.
I mean, whoop, did I lose you? We lost Wes.
Uh-oh.
Well, he'll be back. Hopefully he'll be back. Anyway, and
That'll
then
be fun.
what? Yeah, I'm sure he'll be back. And then here is the showings. I found out a new trick. I found something I could do on this chart. Look at here. I can, because the navy blue line is 2020, the gray line is 2019, and the gold line is current this year. See, but I found out I can do this. We can look at, I mean, obviously, wait a minute. This is obviously last year when we locked down. I mean, there were no showings. And then we came back, roaring back, and then we were been pretty much on trend. But let's take a look at this year. Of course, now it's not going to work. Here we go. Here we go. I can zoom just this part. Yay. So we can take a look at, well, I mean, we're pretty much on trend. I guess that's the point, right?
Yeah.
Can you hear me?
Yeah, now I can hear you. You
Okay.
got something you want to say? You got something you want to say?
I was just talking away before you guys said you couldn't hear me.
Yeah, what were you talking about? You want to go back to that?
No, I was just saying you were talking about open house marketing strategy, and I said that does seem to be fairly common, but I'm still preferring to sell it private in the PLN, the private listing network, before it ever gets to the open house stage.
Right. If it doesn't sell in the coming soon platform, then we end up putting it live like I said, and then do the open house, and then you sell it at the open house. But right, exactly. And now this is an interesting chart. I wanted to dig into this a little further. Actual sale prices. I did the math on this. So last year, year over year, the median, this is for all of Chicagoland. This is the entire MLS. So the median sale price was $245. This year, it's $295. I mean, that's a $50,000 price increase year over year. That's a 20% increase in pricing. It's crazy, right? And then I wanted,
I don't, my guess is that apples to apples, the same properties have not increased 20%. But I think that we are, there's price increases combined with the fact that the higher end property is moving and lower end is not, mostly because they're not because they're not selling, but because those owners are not moving at the same rate. And a lot of them have been priced out of moving. So
I'm finding that entry level, and I don't know how one defines entry level, but I mean, yes, you're right. There's the bottom of the market, which I think is always a tough sell, because you're talking probably developer flipper product, the bottom of the market, right? But
well, I'm referring to more like homeowner, not flippers, but the owned homes, like in the bungalow belt, they are not moving at the same rate that the more upper end property is. So I think it affects the average especially when you're talking, that's all Chicagoland, and beyond. So I just think that I think if you took, like I said, apples to apples, the same property did not increase 20%, but it's just also reflective of what properties are selling.
Okay, I'm gonna challenge that, because I wonder if that's actually true. So, okay.
Well, I mean, do you believe that all properties have actually increased 20%?
I think that entry level price is done really well. This is month supply. This is single family homes, the entire Chicagoland. This is Chicagoland.
all single family. Let's make it just single family resales. And let's see what the median price is. Contract to close. Where is it? Sales price. Here we go. Duh, the first one. Okay. And so this is everything that's 300, I don't know. We can only go up to 335,000, right? I mean, and above. We can't go like 500,000 and above or 1,000,000 and above. They only let us do this. Oh, wait a minute. I take that back. We can make it custom. How do we make it custom? Help me out here, Wes. How do I make it a custom?
I don't use this thing.
You don't use this thing. Well, anyway, all right. So maybe this is, but okay. So this is July 20, median sales price, 553. It's gone up to 5. So what is that? That's a $25,000 increase from, well, what was it in April? Well, since it hit bottom last July, it's gone up 20, call it 25,000, 20. What is that, Terrence? Come on, you're a numbers guy.
That's closer to
Calculators and spreadsheets.
Okay. All right. So let's see all price.
5%.
This is all price ranges from 321 to 370. So that's about a 50. I mean,
But see, that's the same stat, just concentrated on single families. I contend that more of the higher end single families, you know, even in those ranges are selling before the lower ones because those people are more likely to even be able to move up.
right. So say that again, what? Anyway, I actually was doing a little digging around in preparation for today, and I wanted to show you something that I thought was really interesting. Single family. This goes back since they started keeping this data in 08. I think they started keeping the data before then, but anyway, this goes back to 08. And these are your neighborhood, River Northwest condos, resale. This is median sales price, as we know. But look, this trend started happening in 19. That prices started to decline in River North. Everybody says COVID had such an impact. Well, it did. Here's September. I mean, here's January of 20. It actually came up during COVID. Median sales price. Isn't that interesting? And then of course it, you know.
It is, but when we were talking about it though, I
Now
believe
these are resales, but now let me pull up new construction. Look at what's happened to new construction here. Of course, look what the median sales price is, 3.4 million. What was the median sales price on the resales? 500,000. Interesting.
well, the only new construction now there's like Vista, Bennett Place, like the super high end, you know,
Really, yeah.
that's the only new construction that's been happening in the past year or two.
But I mean, so,
Walton,
but I find it really interesting that, I mean, look how this stuff skyrocketed here in September of 17. It was like almost a vertical climb from 1.1 million to 2.5 million. Finally, it peaked here at 3.4 million. Yeah, maybe that's at 9 West Walton or something. I don't know. Huh. Anyway, I just thought it was really interesting.
yeah,
So.
it is. It is, but again, it's not like you're not comparing like property to like property, you know, like that bottom
Well,
and the
no, I
top
mean,
are not the same properties, but I mean, it's still an interesting stat.
But I think this is really interesting that the resales, I mean, they've bottomed out here. this is River North.
Yeah,
they
but see,
bottomed out, and look at here, boom, they're starting to come back up again. The last 2 months, the prices have come back up again. So maybe I don't know. I mean, do we read
See,
this like a
but
stock
that's not
chart?
reflective of what's happening in the market, because that what's happening in the River North market, as well as the other downtown neighborhoods, is the properties are sitting on the market. There's only a few of the available inventory selling. So right now there's over a 24-month supply in all of those neighborhoods. We went from a 3-month supply to a 24-month supply. Now, those people, particularly in
Well,
the
not
Gold Coast,
according to this
Streeterville-
right now, but yes, you're right. I mean, in market time is definitely increasing, no question.
yeah,
But this
and
says this, I mean, according to this, it's an 11-month supply on resales. Maybe
Yeah.
if we put in everything, but even
well,
then,
Gold Coast Streeterville was definitely 24, but all of them are pretty similar.
what area is Streeterville? 33?
Uh,
No.
no, it's 32 as well. It just divides down Michigan Avenue. I mean, I'm sorry, 32 is South Loop. It's still 8008, but it's just divided. That's all of near north. So
okay.
that's a few different neighborhoods. That's Gold Coast, River North, near North, and Streeterville. But what I'm saying, what we talked about earlier, well, last week or whatever, was that the effects of the pricing hasn't happened yet. I see it about to happen. So in other words, like doing comps for somebody we have like a $900,000 2-bedroom over in Streeterville, doing comps like at 340 East Randolph, 600 North Lakeshore Drive, 530 Lakeshore, some of the higher end, nicer, but established buildings in the area. There are a plethora of units on the market. For instance, at 340 East Randolph, there's about a dozen 2-bedrooms, which sometimes there's none, 1, 2 units come and go. There's about a dozen, maybe 14 or 16 units on the market that are similar. And most of them are priced about where they have been selling over the past couple of years. Just over $1 million, slightly under $1 million, 950, 979, 1.1, 1.2, depending on where in the building it is. But then there's 1 or 2 that are priced at 750 because they're just like, we got to be the next one to sell. That's the same at 600 Lakeshore. It's the same at 530 Lakeshore. Most of the buildings I looked at, when those properties do sell, they're still sitting there. They're not being reflected in those stats right now. But when those properties sell, that's a new market. Like at 415 News Northwater, when that 02 sells at under 800,000, which is about 100,000 or nearly 100,000 less than they had been selling for. That's good. That's establishing a new market. So the property owners there, unlike a lot of other areas, have been able to kind of just wait it out. But it's not going to matter in the next few months when those handful of properties finally sell at a substantially lower than they've been selling in the past. So that's going to set the new market rate. And that's when you're going to see the stats start to drop when those finally start to close, and then the other ones have to follow suit, if they want to sell anytime in the next couple of years, that's where it's going to start to show.
Yeah. But, there's also been conversation, well, I think Leonard Steinberg, who's out of Manhattan, right? He hasn't he been saying that the New York market is coming back, but I don't know.
Yeah, and I think River North will too.
Mhm.
But there's such a wealth of property to be absorbed
You're right.
that it's going to take years for it, and by the time that happens, by the time those are selling, all of the comps are going to be 20% less, than they have been, 10 to 20% less. So they will sell, but there will be a new market price for downtown, and then we'll come back up, but it's,
well, might be
now's the-
something for our investors to keep an eye on and
it's
right,
definitely time
and watch.
in those downtown neighborhoods.
Right.
This right now through this summer, I think, will be the time to get those properties, and then you'll start to see them, slowly coming back up. But they're not, when that property sells for 800, they're not going to be able to sell another one for 900 again in a month or two. It's going to take time, before the
right,
market catches up and the appraisals catch up.
right. So Terrence, what are you seeing in the market out there?
I don't look at the market. I don't care about the market. That's what you guys do. I just sit back and look at appraisal reports, and I still have a lot of frustrated and angry buyers that just can't find stuff. So I guess it depends on where they are. If they're, looks like from West what you're saying, if they're in River North Streeterville, they aren't really having any issues, but other neighborhoods they are. I'm still seeing lots of multiple offers, lots of things going over asking. So that leads to a lot of frustrated buyers. But on our end, smooth sailing. Over the course of the year, interest rates are still trending upwards, but over the last month or so, they've kind of dropped a little bit. So things are looking promising right now. Of course, I'm waiting for them to start going back up again. But that's thankfully it's something that we can't control, so no one can get mad at me when they do go up.
Well, yeah, I mean, I think that the common wisdom or whatever is saying that interest rates are only going to go up, I think. I mean, slowly continue to rise. But the interest rates, I don't even know how much of it factors into people's buying decision right now because they're so low. The interest rates are. Are you having appraisal issues? Are you seeing much
That was
of
my
that?
question.
No, knock on wood. So far, the last few have come in at or above value, which is great. So, no complaints there. I mean, again, those are just the conversations that I have, and I'm sure you guys have with buyers as well. Just let them know in advance. If you're going to go at or above asking, if an appraisal comes back low, that money needs to be made up by someone, whether it's you or the seller. So, that's especially over the last couple of months, that expectation is definitely being set up front.
Terrence, do you see from what you can tell, are the appraisal reports, are they trying to trend them up, like knowing what's happening, or are they can only find, whatever the comps were and that's it? Is there, and if the comps are 2 months old and that's what the price was, that's what the price is. But is there, a debit, a credit, given for where the market's going?
Depends on the appraiser.
Okay.
I haven't been having problems with appraisals either, actually. But
I had
again,
one.
knock on wood. Let's keep that going.
Yeah.
I had one, and it was an FHA, which meant that it, got logged, and there was no going away with it, so and no workaround.
I'm
Right.
trying
That's
to.
the fun part about FHA appraisals.
Yeah.
Right. Yeah, exactly. Right. I just want to kind of look, one of the things that we've talked about and something that, and I wanted to go back to this because we kind of breezed over it. Not that one, this one, was the thing about the showings. And I just wanted to highlight this again. Are you guys seeing the showings?
We're seeing a
Yeah, okay. Well, this is a showing activity. And of course, again, the navy blue line was last year, the gold line is this year. And it is following kind of market trends. But what I'm finding interesting about this is here, this must have been, I don't know, what happened here, Wes, that the showings were down so much. They were, down. All of a sudden they were kind of coming up, and all of a sudden that wasn't Easter, was it? Was that
well,
Easter?
is it
That must have been Easter. What?
Is it number of showings or
Yes.
percentage of showings per active property? Because our inventory is low.
No, it's just I think it's just a number of showings that are being made through showing assist.
Because also the properties are selling immediately, so you don't have a history of showings on properties like you would have last year or the year before. You know what
Or
I
if they're doing an open house, you don't log that through Showing Assist either. So these are,
Right.
but these are the showings through Showing Assist. But the point being is that this must have been Easter weekend, and then it like took off. But
Well, that's
it's
true.
been-
Easter floats, so it could have been.
right?
Yeah.
So, but and it seems like my experience has been is that the market is starting to slow down a little bit in terms of number of showings, and that seems to hold this out.
Mhm.
That we're kind of hitting that. Whereas, of course, last year we started to open back up again from COVID, but people that we're talking to, Wes, our colleagues, other Compass colleagues that we talk to, a lot of them are talking about how buyers are just exhausted in this process, and they're just, they've made several offers, they've come in way over asking, they haven't been the winning bid, and they've just finally kind of threw up their hands and said, you know what, we're just going to sit tight for a while and wait till things simmer down. So I kind of feel that there's some of that going on in the market too.
Sure. I'm surprised we didn't see more of it sooner.
Yeah. But it continues to be, and of course now sellers are starting to get onto the bandwagon. Now they hear all the hype about not enough inventory, and now they're starting now as our spring market is starting to fade, they're all jumping into the market.
I'll bring inventory up.
Yeah, it'll be good. Anyway, I think we're going to continue to have a good market, and I don't know if we got anything more we want to add to that, except did you see Rachel's email this morning that the office is opening up? We don't have to wear masks. We can come into the office if you're vaccinated. We don't have to wear our masks. The staff will be coming back. Did you see that?
Nice.
Yeah.
Congrats.
Yeah.
How about you guys, Terrence?
I haven't been in the office in I never go in the office.
I haven't been in the office either, but are they open?
Even pre-COVID, I didn't go in the office. Couldn't tell you, but the office is open. Yeah, they're in there. The processing team is in there. They've been there, throughout the whole thing. So
Yeah.
that's good. That keeps us going. But no, I don't go in there at all.
Yeah, I don't go into the office, but Wes, you were officing out of the office primarily before COVID, right? Are you going to go back?
Well, I've got to get back to the city first.
Right. Yeah. Right.
We're still out of the city in quarantine, but
Yeah.
just popping in and out.
What about Stump? Is there any talk about his company reopening? No.
Well, there's talk, but there's nothing planned. Yeah. So yeah,
I'm
they're the
really
largest
surprised
tenant
because their industry, they really, I remember you telling me that their industry, Terrence, just so you know, Wes's partner is in the ad, he works for an ad agency, right?
Right.
And I remember you telling me that they really felt like they needed to be together to collaborate.
Yeah.
I mean,
think
physically together, not Zoom call together, but physically together.
Well, I think they all agree it's better. Yeah. I think they were all surprised how well they've done without being together, being spread out all over the country. But I think all of them in the creative departments would feel that, the collaboration is better. On the same hand, I don't think all of them are wanting to go back full time either. So,
right. Yeah, I think a lot of things are going to change in that regard,
Yeah.
right? We've all gotten used to the technology now, so.
Or used to not being in the office every day.
So next Monday, the next week at this time is actually Labor Day. And I think we're going to take the week off because I've actually gotten an invitation for lunch. Yay. So I think we're going to take next week off. Les, are you down with that?
Yeah, that sounds good.
Yeah, so we'll enjoy that. Well, not Labor Day. I keep saying Labor Day, Memorial Day holiday. Everybody enjoy the holiday. Terrence, thanks for joining us.
Thanks, Terrence.
If you want to join
Thanks
us
for having
every
me.
week, Wes and I have been doing this every week. You're very welcome to join us every week if you'd like to and add to the conversation.
But you don't have to.
You don't have to.
Well, I appreciate the invite. Thank you, guys.
Yeah, sure. So if you have any questions, put it in the chat. Reach back out to either Wes Walker, Mary Nack, or Terrence Terrell, our mortgage broker extraordinaire with Molitor Financial. And otherwise, have a great holiday. Drive safe, be safe, enjoy the grill, the cooking out, the grilling, and we'll see you back in June. So bye for
Bye,
now.
everybody.
Bye.
All right, guys.